Hello, chart watchers, and welcome to this Friday, July 13th Market Watchers live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, as we end another week here, we got the Dow Jones Industrial Average currently up about 87 points, threatening the 25,000 level, trading just above that right now. The S&P 500, we've talked about 2,800, currently trading at 2,802, up 4 points today. The NASDAQ broke out to an all-time high, closing yesterday at about 78.24. It's up another 12 points to 78.36. The Russell 2000, which earlier this week touched an intraday all-time high, pulled back, held its rising 20-day moving average, and it currently is up a couple of points today. 10-year Treasury yield continues to dip a little lower, down 2 basis points to 2.83%. Volatility continues to move lower. We've been seeing it trend lower now throughout the last 2-3 weeks, and the VIX earlier today did move below 12 again to test that June low, although it is off its earlier lows. Energy having a nice day today, up about 0.75%. Also, consumer staples making another breakout to the upside, so we got a little defensive action there. Although utilities, the weakest group, actually down about 0.25% today. Banks in the news, had a number of large banks report. We'll talk about that in a bit, but banks well off their earlier lows, had some initial downside reaction in the banks to those earnings reports, but we have bounced back, currently down about 4 points there, less than 1%. JP Morgan and Wells Fargo, two of the banks that reported. You can see JP Morgan actually holding its own, up just a fraction from yesterday's close, while Wells Fargo has had a lot of wild trading this morning, gapping down, missing some estimates. But again, we'll talk about that in a bit. But it is Friday, Erin. It's Friday the 13th. Are you superstitious?
You know what? 13 has always been my lucky number. So I probably should, fill my portfolio today.
Well, if it didn't work out, then you'd have reason. You'd know that maybe that wasn't such a good idea with the Friday the 13th. But that's good that 13 is a good number.
Yeah, it's usually been a good number for me. I don't know why, but it's always worked out for me. It started when I was younger, and I won a bunch of bingos because I had B13.
Oh, okay.
So ever since then, I have remembered it and thought of it as my lucky number.
All right. Now, do you have any other superstitions? The black cat, the four-leaf clover?
With my sporting teams, I'm very superstitious. If we're on a winning streak, I'll wear the same jersey over and over until there's a loss, because it's all up to me whether I have the right jersey on, whether they win or not. So yes, I am superstitious to some degree. Well, when it comes to my sports teams.
Yeah. Well, I keep the same outfit on if the S&P 500 goes up every day. So the last 7 or 8 days, no one's been around me for some reason.
Indeed.
Yeah. But anyway, we got a bunch to go over. I'll let you get into the announcements and the agenda for today.
Absolutely. All right. So as far as what's coming up next week, I will be doing a workshop on more trading chart patterns. I did trading chart patterns 2 weeks ago. I'll just continue that. Tom McClellan will be here on Wednesday as our special guest. And I'm sure you recognize the McClellan oscillator. And we have Julius, Mr. RRG, will be coming in on Thursday. So that should be a great show as always. And we will have everything stock charts on Friday next week. So you'll want to pay attention and come in next week. It's going to be a great week. Today is going to be a great day, though. We're going to start off with Inside the Lines, and then we're going to follow that up with a watch list. We'll show you some of the stocks that are currently on our watch list. 10 and 10 to 1, our first stock is going to be AFLAC, AFL, and we're going to finish off the program with my sentiment update. So you'll want to watch that. Kind of interesting today. I thought there was some interesting moves on the sentiment. All right, so we've got a packed agenda. Let's go ahead and hear some technical news and headlines.
All right. Well, I was kind of hoping maybe that we would see a breakout in the 10-year Treasury yield today. It did not happen. We did have some bank earnings reports. We'll get to those in just a second. But we did have one economic report out this morning. The July consumer sentiment came out 10 a.m. It was weaker than expected, 97.1 versus the anticipated 98.4 level. But you can see the 10-year Treasury yield is down two basis points today after once again testing and failing at that declining 20-day moving average. We've seen this quite a bit now over the past 3 to 4 weeks. So technically, it's pretty clear what we want to see. We want to see this breakout above that 20-day moving average. And while it does downtrend, we'd like to see these two earlier lows back in May, just about 2.77%. And then earlier in early April, we had a low down just above 270, about 272, 273. So those are going to be a couple of key levels to watch to the downside on the TNX. And again, to the upside, let's watch that 20-day moving average. Okay, the dollar. This is always going to be, at least in my opinion, big news because I do think it impacts trading strategies and what you look at going forward. We have seen the dollar begin to rise again here this week. We hit a low back on Monday at about 24.77 or so, 24.76 on the UUP, which is the Invesco US Dollar Index Bullish Fund. And we hit an earlier high today of 25.10, which isn't far from the high we saw at the end of June. And if you're following the dollar index, this updates at the close each day. But you do see that the last 4 days coming off the 50-day moving average. And we had talked about the possibility of some short-term consolidation with the higher prices and that lower PPO. That's a negative divergence. So I look for a 50-day test. I look for a centerline test for the PPO. And essentially, we've gotten that. And so I think the dollar now is in a kind of, it's kind of open to go in whichever direction it really wants to move at this point. I mean, I'd still be watching maybe about 93 on the index to the downside as support. Just above 95 is key resistance. And we could go back on a longer term monthly chart. And I think here you'd see since 2011, if you connected these lows on the dollar, you still have an uptrend in play, even though from a monthly perspective, we had the higher prices, we had the lower PPO, so we had a negative divergence on a monthly chart. And that, with that reversing candle, that bearish engulfing candle to open 2017, sent us down throughout most of 2017 into early 2018. And now we seem to be moving back to the upside. I would watch, though, because if we get back through 95 with some gusto to the upside, I think that is adding to the strength that we have seen since the 2011 bottom. I think that is a resumption, would be confirmation for me anyway, that there's a resumption and that we're heading back toward that 102, 103 level on the dollar. And if that happens, then that brings into play small caps, because if the dollar's rising, its tendency to indicate that the U.S. economy is strengthening, perhaps faster than other areas around the world. And so the small caps that do business solely in the U.S. tend to outperform in that environment. Also, you might look for other areas of the market that tend to perform well with a strong domestic economy, like railroads. So those are a couple of ideas if the dollar breaks out, and that's something I'll be watching pretty closely. Yesterday, I mentioned that the NASDAQ had closed at an all-time high. Here you can see the breakout. We had a little cup in play. We pulled back. Would like to have seen a little bit deeper handle, maybe down to that 20-day moving average, but we broke out nonetheless. Volume did pick up. It was the heaviest volume on the NASDAQ that we've seen so far in July. July tends to be a pretty slow month in terms of volume. So it was notable to see the volume pick up on this breakout. And we're continuing to move higher, although only 14 points. But the breakout yesterday was notable. And when you look at the VXN, which is the volatility index on the NASDAQ 100, you can see that we are making our way down to some pretty significant areas of lows that, for 2018. So anything back down around that 15 area on the VXN would be very bullish for the NASDAQ 100, and we seem to be trending in that direction. So I look at the VIX and the VXN for directional trends. I don't look as much for moving averages. If you think about it, a moving average is really designed to track a trend. And if you look long-term at the VIX or the VXN, let's pull up the monthly chart, there's no real trend in place. What happens, it's not like a stock that continues to go higher and higher for many, many years. The VIX spikes, and then it comes back down, or the VXN. They spike, they come back down. They just move up and down with fear and complacency. And so the fact that you're looking at a moving average on it like a daily chart, I find it to be really useless. If it wasn't my normal chart style setup, I wouldn't even put a moving average on this chart. I really am just mostly interested in on what we're doing. Are we trending higher? Are we trending lower? I think right now you can see the VXN is clearly trending lower, as is the VIX. and that is helping the stock market as a lot of the fear comes out of the of trading. Okay, that was the NASDAQ that we talked about. Let's talk about the Russell 2000. Russell 2000 made the breakout to an all-time high in June, pulled back to a key area right around 1640, held support, went back up. We actually did, by about a half a point, move into all-time high territory, but we reversed, put in a bearish engulfing candle, pulled back almost to the 20-day moving average, now moving higher. I think the Russell 2000 is going to break out, and a real catalyst would be a breakout on that dollar to the upside, something to continue to watch. The S&P 500, we've been talking for several months about 2,800. You can see that off of the huge selling we had back at the end of January, early February, on the reaction highs, we've had intraday moves above 2,800, but we have yet to get a close. Right now, we are trading at 2,803. I think a breakout above 2,800 and on a closing basis would be bullish for the S&P 500. I think that would add to the bullishness that we're seeing on the NASDAQ and more recently on the Russell 2000. Note that the daily PPO is coming back up above the center line, pointing straight up. So a breakout with an accelerating PPO to me shows accelerating momentum. And I would look for higher prices to test that January high, with any pullback being supported by the rising 20-day moving average. The Dow Jones trying to get through 25,000. As we pull this up, you can see the 25,000 level. Now, it used to be a big milestone. It's a big round number. But, you know, we've looked back over the last few months, several months, you can see that the 25,000 level has been taken out to the top side and back down to the downside. So I don't really think it carries that much weight at this point, because it's been, we've moved up above it and below it so many times. Also, back in January, we cleared 26,000. So really the key even number, if that's what you're looking to, the big one for me is going to be 27,000, as that would represent the first time ever on the Dow. But still, 25,000 is a round number. There are obviously a lot of traders that are going to pay attention to it. It's going to be announced on CNBC and so forth. So it's at least worth paying attention to. Okay, I did mention the VIX when we were talking about the VXN. I just wanted to point out that we did move back down below 12 earlier. You can see we got down to 1162 today, and that was pretty darn close to the June low. And since the selling that we saw back in January into February, this represents really the lowest levels that we have seen on the VIX. And if you look at the history of the stock market, when the VIX is down in this level, this is typically when you see solid gains in the stock market. So I think that the fact that all this trade war talk has, kind of spooked the market for a while, I think it was probably a good thing and unwound things in the market for a bit. Some of the overbought areas certainly are no longer overbought. And I think the market is now free to move higher with a VIX reading back down in the 12s. Let's talk a little bit about the banks. The bank index first did pull back pretty substantially. I had written in my blog this morning in Trading Places that I was really interested to see whether or not banks would hold 450. I expected we'd see a little downside action as the bank earnings reports were a little bit mixed. The yield curve is actually flattening, has been flattening. I think I read this morning that the yield curve is at its lowest level since 2007. So, and that impacts bank earnings, net interest margin. So the question is, technically, were we going to break down? That's all the fundamental news, but were we going to break down below that 450 level? I think if we do, you really want to be careful with the banks. If we hold, I think this is a great reward to risk entry area into some of these banks. But it is a little frustrating because they haven't been moving. They've had just a couple of big moves. We saw one back in February where we had a nice move in the bank index. Another pretty good one in May. Other than that, it's been mostly down. It's kind of had this little bit of a downtrend action that we've seen throughout 2018. But still, JP Morgan, Wells Fargo, we had that poll running yesterday. Which one did you think would hold up best? Most of the respondents said JP Morgan. And I would have to say that those who responded JP Morgan are correct. One that I thought was worth watching, it initially had the worst reaction, but I think it's been performing a little bit better since the open, is Wells Fargo. Wells Fargo did miss on its bottom line, $1.08 versus $1.12. But after filling the gap that we saw, we had a huge gap back here in June, put in an intraday high around 57 and change, went back up, tested that, and now with the bad news, we went down and filled the gap. but we have rallied about $1.50 off of that earlier low, and volume is heavy. So if we can continue to hold, now that the earnings are out, and so far we're finding buyers above support, I would really watch this 53 level, maybe just beneath 52.75, perhaps. As long as Wells Fargo continues to hold that level, of all the banks, of at least all the bigger banks, I think some of the smaller banks are much better, look much better technically. But I think if you're looking at the larger banks, I still like the fact that the relative chart and the relative price action here on Wells Fargo, outside of the last 10 days or so, has been pretty strong. We're actually seeing the Wells Fargo outperform. And the fact they came up and missed and gapped down and now still rallying, trying to rally back, I think that's still a net positive for Wells Fargo. So of the big banks, I'd be tempted, if I was going to go with any of them, maybe to go with Wells Fargo, just because it seems like the market's priced in a lot of bad stuff with everything that took place here back in February through May. And now on a relative basis, we actually have been trending higher while the overall bank index has been going lower. So I think you're seeing still have some good relative strength in Wells Fargo, something to consider. I do want to mention also another industry group, healthcare providers. We did get a big breakout. I'm going to pull up the weekly chart here because I'd mentioned a while back that we had a little cup. We had pulled back off the high at 1950. We are trying to make a breakout, and today's close, this is a weekly chart, so this is a weekly candle, and today's close being Friday would mark a weekly breakout with the PPO strengthening here. So I think that is a good sign. UNH does report its earnings on Tuesday, United Health. So if we pull up the chart on UNH, you can see also UNH making a breakout before its earnings report. Another one that, again, if we look at that longer term weekly chart here, it actually went a little bit higher than that prior high in June. We pulled back, and now we're making another breakout. I think United Health still continues to look really good, but you got to be careful with earnings. Pull back with earnings. If they beat and the market sells off a little bit, probably it's going to set up a nice opportunity there. Certainly one I'd keep them on a watch list. And let's take a look at the coal group. If you look at coal, I mean, we've been stair-stepping higher. We've pulled back on the weekly chart, holding on to that rising 20-week moving average. Things look pretty good on the weekly chart. If we look at the daily chart, not looking quite so good as we continue to struggle beneath that declining 20-day moving average. So which one of these charts do you believe? Well, I would tend to stick with the weekly, which is a little bit more bullish. So if we can get above the 20-day moving average on the daily, I think that would be a good sign. But I want to caution you about one thing going forward, and this was something that I'd also mentioned in my blog recently, and that is that coal from June through September does not like this time of the year. So over the last 18 years, you can see June average is going down 3.8%, July 4%, August 1.2%, and September 4.8%. So we have a lot of weakness, historical weakness throughout the summer months. So that weekly chart, if it does break down in the daily, we don't get it back up above that 20-day moving average, this is one area to be careful about. It does continue to strengthen into year end, and you can see some really good results on coal October, November, and December. But let's be careful here in the summer months, especially if we see a breakdown on that weekly chart. Okay, that is about what I have today. I do want to, before we go into our next segment, I do just want to mention that next week, Bank of America reports on Monday, along with Netflix. So if you're holding Netflix, that's going to be a couple of big reports. On Tuesday, I mentioned United Health, also Johnson & Johnson, Goldman Sachs, and CSX, a railroad, on Tuesday. And then Wednesday, IBM, Novartis, Abbott Labs, Morgan Stanley, American Express, eBay, U.S. Bancorp. I mean, they just start piling in. Their earnings are really going to start picking up into next week. So just be prepared for that. Okay, let's move on to inside the lines. This is where, the fundamentals sometimes tell us one thing. We want to go inside the lines, look at those charts and see what's going on and whether or not it makes sense technically. What do you have for inside the lines today, Erin?
All right. I pulled out some stocks that were in the news, and so I'll look at a few of those. Let's get here. All right. So, we were talking about the banks. One of them I don't think you discussed, Tom, was First Republic, because they also reported and they were listed in the column of, we need to see those good earnings from all of these banks. And this was one of the ones they were looking at. So I thought I would take a peek at that one to start us off. So let's see. And, I agree with you. I think the banks are a place that we should continue to pay attention to, especially if we're going to see those, rising rates. And this one I felt was pretty interesting. It's up over 1%. So it is a little bit on the it's a little more stealth, I think, than some of the others. I want to go ahead and annotate it real quickly for you, because the first thing I'm looking at, and while it's not technically textbook style reverse head and shoulders, I do see one. And, it's putting in right now that right shoulder. And I would be watching to see if we can get that move to the upside above that head and shoulders, that breakout. So let's go ahead and we'll put that in there as well. So we have a neckline. There we go. All right. So it is sloping. And we have seen a break above, but we're not getting that close above it yet. But you know what? This pullback, honestly, I could have added this to my watch list. Having seen this one today, you can see the PMO has been mostly flat, but it is starting to turn back up. So I thought this chart looked pretty interesting, especially if, we're looking at banks on the improving side. And although we haven't gotten official execution of this reverse head and shoulders, I think that having pulled back now to that 20-day EMA, this actually might be a good entry to get in, because we got the breakout, but we had the pullback. We always look for those breakouts, but we always like to see a pullback to a breakout point. So I thought this one was pretty interesting, actually. So I'm going to leave that in here. Another one I was going to look at was AT&T. In the news right now, because I guess the government is going to go back after them on an antitrust suit on, I think it's acquiring, I think it was Time Warner. And so they're getting ready to go back to court. And on top of that, I guess, they're also the owners of HBO, and I guess the nominations came out, and Netflix pretty much beat them in the Emmy category of getting nominated. Again, this is really out there news. So, that's why I think it's important to look at some of this stuff, just to look at what's in the news and what might matter. So, they have some problems coming up now, and I would be certainly concerned. And when I look at this, this chart, there's not anything really that's telling me this is a good thing. We already had gotten into a bear market configuration, and now we're looking at a continued decline, and you've got the 20 had already crossed below that 50, so you have a very negative setup. We had that 5-day EMA cross above the 20, which gave me a short-term trend model buy, but as you can see today, we're already setting up for a short-term trend model sell, as the 5-day has moved below the 20-day EMA. So, if you wanted to add this to a watch list and see, if it comes down and tests this area of support, I suspect it's pretty important, even on the weekly chart. Indeed it is. Let's go ahead and annotate this one. And I will do the trusty auto support and resistance. I'm going to make it a fat one, translucent. I've been having difficulty here with my annotations, and I'm not sure why. All right, we'll try one more time. There we go. I definitely want to see this one on the chart. My goodness. Yeah, I don't know what's going on there. So, all right, well, I will show it to you visually here, but you can see, look at this support. So we're getting back from late 2017, but we're also seeing it at these tops that we saw previously in 2014 and 2015. So this is a really important area of support. And if we come back down and test that, I think that could be very interesting. And when you look at the weekly chart, I think you could also make a case for a double bottom setting up. So, I would want to watch this. If we do get the continuation here on, this weekly chart to the upside, that would be great, because that would set up a double bottom. But you know what? If we go down one more time, a triple bottom will work for me too. So I'd be watching this one closely on the weekly chart. I think there's some opportunity that might present itself with AT&T coming up. All right, the other one, McDonald's and Kellogg were both in the news today, because I guess they're in the middle of some health investigations. McDonald's, I guess, had some problems with some salads. They're thinking a lot of cases of people getting sick from that. And then Kellogg also had problems with Honey Smacks cereal. So I don't know if you guys are pouring that cereal in your bowl, but apparently you may want to reconsider that. So let's go ahead. I'll look at McDonald's really quick. You can see we're hitting some really important support here, but the PMO is turning down below its signal line. Don't like it. However, the OBV is starting to improve. So might want to keep an eye on this one as far, with McDonald's. I like this area of support that's getting tested right now, but the PMO isn't looking very healthy. So we'd want to wait and see some positive move. And then finally, I wanted to finish off, there we go, with Kellogg. And let's see if my annotation tool is working right now. It just is not working. Okay. So anyway, what I would note here is that PMO is very overbought and getting ready to turn down. So this stock is really set up at this point, I think, for a downturn. And if this investigation, I guess, comes to pass or not, I don't know that that's necessarily something to consider or worry about. But that's a pretty important short-term area of support here, right about $70. But I wouldn't even put this on my watch list, because I am seeing such a negative configuration on the PMO. So those were mine that were inside the lines. What might you have?
Okay, I've got a few. First, I wanted to start off with a company called Ingredient. After the bell yesterday, they warned. And again, I just want to go back to this relative chart style that I use to show how, from a technical perspective, while you never know that a warning is coming, you certainly can see that there's some serious underperformance going on. Ingredient had hit a high back in January, like the overall market. But unlike the overall market, it has not really bounced. And through the last 5 months, the stock has fallen from 145 all the way down to about 110 and change at yesterday's close. And then they had the warning. You can see the volume picking up and a huge sell-off today, down another 10%. But I want you to take a look. I mean, this is the food processing area where we've got a lot of the stocks in this space, which really had picked up over the past 2.5 months off of that low that we saw back at the beginning of May. But notice over that same period, when its peers bottomed and started rising, Ingredient continued to move sideways and really has struggled to gain anything. And so what that's resulted in is a stock that has been horrible relative to its peers. It's been horrible relative to the S&P 500. And honestly, looking at its peers versus the S&P 500, we've been in a downtrend for many, many months. So just understanding, when you look at a stock like INGR, even if you were looking at it earlier, maybe during these the moves, maybe moving back above the 20-day moving average, you might have gotten some signals that perhaps said that, hey, things are starting to improve here. I think it's always worthwhile to go back and take a look at the industry you're investing in. Is that an industry that the market really likes? Is it in favor? And then look within its peers to see whether or not the stock you're looking at is performing well versus its peers. And so I'm not shocked at all when I see a company like this come out and warn, because I think the charts have been warning us for the past several months leading up to the announcement that came out today. They did say that their quarter 2 and fiscal year 18 EPS would be below expectations. And then they threw out there that there'd be $125 million cost savings program. And the market doesn't seem to care. All they know is that the management team has kind of misled them on earnings expectations. And apparently an analyst going out there and talking with the company could see it coming, because this is a stock, again, that has been underperforming for a while. So that was one I thought was particularly interesting. Let's talk about Terex, TEX. This is a company that authorized a new share repurchase program of up to 300 million shares. And the stock's been performing a little bit better here recently. Had a nice move up back on July 9th, cleared a prior reaction high, all that selling that came in early February. Never could really get back through 44. Here we did it just about a week ago, or a little less than a week ago. I guess that was back on Monday. Pulled back for a couple of days, and now today with the announcement breaking out, moving to new highs. Technically, I think things look good here, although we are still well off the January high. So watch that rising 20-day moving average. PPO looks great. 20-day moving average should hold as support. WWE. This is the World Wrestling Entertainment. I am not a WWE fan. I don't really get it. But for those of you that are, I can tell you there is one analyst, one company that is a fan of WWE, and that's Morgan Stanley, because they raised their target today from $58 to $100. Well, first of all, the stock was trading going into the day at 75, so raising their target from 58 probably made sense. But they did raise it all the way to 100. I don't like this candle, though, today, to be honest. Big volume. We had the breakout. Look at the PPO, which has been continually dropping, and with big volume so far failing. Now, if we can reverse later today, finish strong, then I like WWE a little bit more. Needs to close over 77.50 at a minimum for me to like this chart currently. If it fails, I'd be looking at least initially for a 20-day test, possibly even a move down to test gap support around 67 with that rising 50-day moving average coming up from underneath. Something to keep in mind. I like WWE, but I don't like the negative divergence. And so far, the failure on big volume after a pretty significant upgrade, at least a raised target out of Morgan Stanley. Diageo, they were upgraded at Goldman Sachs, initiated with a buy at Argus. So they got two positive pieces of news this morning. And Argus set a price target at 168, and the stock is currently at 148. So you got some room here. We're definitely beginning to strengthen technically on the chart. Like to see a little bit more volume. Previously, we had higher highs with lower PPO. We came down, we reset that PPO just below the center line, went below the 50, and now we're starting to strengthen again. But if we're going to get through 149, let's do it with some increasing volume. I'd feel better about it if we got some more volume in. INCY. This is Insight. It's a biotech, and biotechs have been on fire, but Insight got downgraded, and honestly, this is just a bad stock in a hot sector right now. I would avoid it. We can, again, look at that relative chart to give us some clues, but look at what Insight has been doing over the course of the last year, certainly since late August of 2017. And when you look at the biotechs, yeah, it hasn't been great, but we're basically where we were 8-10 months ago, which is a lot more than can be said for INCY. So what does that mean? Well, on a relative basis, Insight has been a horrific performer relative to its peers in the biotech space. It's been awful versus the S&P 500. And even though the biotechs have started to show some life here in July, and they typically do during the month of July, we've talked about that several times here on the show, we're not seeing that kind of move in Insight. So the fact that we got downgraded, I think this is one that I would continue to avoid. Netflix. Netflix, and this will be the final one I have. It wasn't downgraded, but there were some cautious comments coming from Deutsche Bank regarding Q2 net subscriber ads. And I never can quite understand why these analysts come out and try to upgrade, downgrade, issue cautionary number, whatever they're going to do, one day ahead of earnings or 2 days ahead of earnings. It just doesn't make any sense because by law, they shouldn't have this information. And so I don't know. I just always hesitate. I think it's probably presenting an opportunity, especially since Netflix just a few days ago was at 420. Now it's back down at 400. But I don't like to hold into earnings, so I'm going to avoid Netflix for now. But this is one of the best stocks on the planet. It has been for the last few years. I suspect we're going to get a good report. I just don't know how the market's going to react to it. Okay, let's go ahead and just pull up a quick summary of what we just discussed. Erin went through a number of stocks with news for her look at inside the lines, looking technically at the charts. And I did the same for several. So here is the summary of the stocks that we took a look at. And I guess we will go ahead and move into a watch list. And what we do with the watch list are just anything technically on the charts that just appeal to us. And it could be that, we like an uptrend, but it's right up against resistance trying to make a breakout, or maybe it's pulling back. We're seeing if it's going to hold. But Erin, I'm going to let you go ahead and take a look at this first. What stocks do you have on your watch list?
All right. Well, I have quite a few. I don't know if I'll get to all of them, but I wanted to give you a look at a few of them. I try to get, when I do my watch list, I do kind of want to try and get different sectors in there because I do like, obviously, you want to be able to diversify and look into, the different sectors and which ones are you're expecting to do better or that are doing well. And then I can, maybe focus in on my watch list. This is just a portion that I thought would be interesting to look at. And, some of these I've written about, some of these we've looked at. So anyway, I'm going to start with NVIDIA because, everybody wants to see what's going on with NVIDIA, right? So it is actually on my watch list. This is a strong stock. It had some troubled times here, but now I see this cup kind of formation going on, a little bit of a handle possibly, maybe a flag coming in. There are a lot of things you can look at here, and I'm seeing that really nice momentum coming up on the PMO. We don't quite have that buy signal yet, and if I can continue to see this nice move with the volume and again the momentum staying and picking up, I'm watching this one. I want to see it break out from this small short-term flag. I think that's where I want to get where I'd want to get back in. And, with the flagpole, it would certainly take us above this all-time high back in June. So NVIDIA's on the list. And, it's always, the watch list, honestly, it's nice when you see some of these large pullbacks, because, again, that to me says there might be some good opportunity going on there. Let's also look at, I wrote about Mazor Robotics a while back. Excuse me. And I've got the 20-50-day EMA crossover. So I like that. I've had the PMO crossover, but let's face it, we've been in this trading range and we're at the top of it. So I'm going to be watching for the breakout because the upside potential here, I think, is great. At a minimum, I'd be looking at a $70 range on the really, I could see above 75, 76 on the most optimistic target. So I think it's really setting up well, but I want to see the breakout. Because there's a good chance we could end up seeing it just go back down and test the bottom of this trading range. So watching that one for the breakout. Let's see. GE, we talk about this, and Carl, like I said, got into it at a really good time. I'm going to get the annotation tool out here again. All righty. Oh gosh, sometimes that just gets so blurry. There we go. Okay, I'm going to use the auto support resistance. And in this case, I want to make it not translucent because I want to see, oh my goodness, that just doesn't want to work today. I don't know why. Yeah, I'm just not having fun. It's just not working for me for the annotation tool today. That's okay. So I'm looking at this reverse head and shoulders. And, I wish I'd gotten in, obviously, when Carl did on the formation of this right shoulder. However, I did not. And so now I'm watching to see if we can get the breakout above that head and shoulders. We're not quite there with the 20-50-day EMA crossover. The PMO is looking very healthy. It's now gotten above the zero line, so liking that. Let's see, what else do we have? KRC. There we go, Kilroy Realty. And I'm just about ready to get that PMO buy signal. Got that rounded bottom. I was hoping to get more of a pullback here for a handle on a cup. Didn't get it, so I'm not getting the pullback I want, but I'm going to watch. It's on my watch list because I do want to see it get above 77, and hold it and close above it. So it's on the way to being something good. I mean, look at the OBV and look at the scooter here. We're talking about some pretty good setups here. Devon Industries Energy. Now I know this was my pick not last Monday but the Monday before, And as I said, I would have hit my target, probably sold. I didn't buy when I should have, when I told everybody to get in. I didn't, I didn't get into it myself. But anyway, had I would have hit that target, and I would have probably sold about half of the position, because I had a really good setup, and I talked about this one yesterday, had a good setup. There's no reason why I wouldn't have done, exactly what I'm telling you. And of course it did fall, but we're having a nice move, a nice breakout right now. And so this one's on my watch list, because I think if we can hold that breakout, I would be looking for higher prices here. The PMO had turned down, so I was, thinking this might not be a good watch list candidate. However, it's turned back up. We've got a PMO buy signal now, and there's a good chance we'll have a close over that $45 level here. And I think that would be quite interesting, as we say. But we are talking about a 3% move pretty much today on that move above 45. So I'll have to look at it and see where it does close, because we did peak out above here. So again, watch where it's on a watch list. That's why we're talking about it. Xalta Coating Systems. This one I think is really interesting, because we're at the bottom of a trading range, and the PMO attempted and did not make it. It had that top below the signal line, which isn't necessarily what you want to see. But now we're seeing a rising bottom on the PMO, and if you look at the bottoms on price, they're in decline. So I think this might be a really good short-term setup. So I'm watching this to see whether that PMO can hold that rise. If it turns back down, I'll be watching again just to see how far it goes, whether we get the breakdown. But I think this one could be very interesting. Even though it's not been in a strong rising trend, it's been really pretty accurate on the trading range. I mean, it pretty much hits the top, goes to the bottom, hits the top, goes to the bottom. So I think that, in a trading range situation, this one is very interesting, as we say. What do you have on your watch list, Tom? Anything interesting? I'm sure there is.
Yeah, I've got a few. I'm going to start off with Brookdale, BKD. So let me make sure I've got that set up for everyone. All right, let's pull this up and take a look at some of these. Okay, BKD, first of all, I think I mentioned this one recently. We did get the breakout. We've gone down. We've tested that 20-day moving average. This was a pretty good area of resistance, just about 950 or below. And then we broke up above it, went above $10. Came back today, though, on some pretty decent volume and hit just below the 20-day and then came back up above. I did not buy this one because I didn't see it at the time. But I do like the fact that when it went below the 20, on the move back up through the 20, that is one certainly that you could jump into, because it is at price support. And we were coming back down, testing that area for the first time, along with that 20-day moving average. But I'd keep a fairly tight stop. I wouldn't want to go back down below that 937 low that was printed earlier today, because you can see the volume is not light today. And so another push through could be troublesome because of the higher price and the lower PPO that could set up a 50-day test. So I'd have to keep a very tight stop. And it's also one that if I got in on the 20-day and it got back up to $10, I'd probably take the money and run. ELLI, this is in the software space. And I know that this is one, too, that I mentioned. But recently, you can see the lows just around 102.50. I'm going to say 102 to 102.50. They've been holding for the last 2 months. We've got a good industry in software. And so I think the move down today with the increasing volume, testing this level and trying to reverse off of it, definitely presents an opportunity, even though it is down 3.8% today. I would just say, listen, if it closes below 102, maybe 101.50, I would take my small loss and move to the sidelines. But I'd actually look for some strength here at this level on ELLI. Synaptics, SYNA. This one came down after a huge gap up, filled the gap, and hit the 20-day moving average at the same time. Began to rise a little, but it is just sideways consolidating and drifting here. But I think you've got really good price support and gap support at 49. And then you've got the 20-day moving average just below 50. Stock's trading just a little bit above it, but I think that 49 to 50 area is solid, is a solid level for accumulation on Synaptics. AXTI, which is American Xtol Technology, 850. We tried to get that breakout a couple of days ago, but first of all, to check out the heavy volume here the last 2 days, the huge move up. This is why I don't like, and this is why the WWE I looked at earlier, when you get this breakout like this, and then you come back down and fail to hold it on a big volume day. Look at what happened today after that happened yesterday. We did get a big move down. At one point, we were down probably about 6% from yesterday's close. This is what you might look for on WWE if we don't get that breakout later today. But anyway, AXTI on the pullback, I actually like it either on a 20-day test or on a breakout above 850. ZAYO. This one's got beautiful volume on that breakout. You can see right here, early July, we broke out above this 37.5 to 38 range, which has been resistance not only in 2018, but we've been consolidating on a weekly chart. If I pull up a 3-year weekly chart, you can see that this 37, 38 area has been very difficult to negotiate for quite some time. But since bottoming back at the end of April, the volume has been really strong on this push from 33 up to 39 and change. So I think that this breakout is very meaningful, and a pullback, if we go back to that daily chart, the fact that we're pulling back, I think if this continues and we get back anywhere close to 38, 37, 75, I think that's great entry into ZAYO. From my strong earnings chart list, of course, I can't do watch list without bringing up a couple of these. So all these others that I've talked about so far were not off of my strong earnings chart list. They were simply stocks that are pulling back. I used the scooters to look for mid-cap and small-cap stocks that are actually pulling back in the short term. But from my strong earnings chart list, here are a few. I've got Deckers Outdoor, DECK. Check out the higher high. The PPO was really weak, so we had a negative divergence. Then we got that reversing candle, the bearish engulfing. That is normally a kiss of death when you get the combination of slowing momentum, reversing candle, and failure to hold the breakout all together. And since that time, over the past 3 weeks, we've seen Deckers move from that high at 122.5 down to about 111. We're getting a 50-day test, and we're getting that PPO centerline test. I really would like a reversing candle. I think if it goes below the 50, you're going to find some really good support down around 107, 107.50. So I think actually accumulating at the current price down to about 107.50, keeping a closing stop maybe below 105 with a target up at 122.50 makes sense for me on Deckers. Fossil, another one that had a negative divergence. See how prices kept going up? The PPO rolled over, and then we broke out, but volume wasn't really there. And then finally, we failed to hold the breakout. And once that happened, the continuing weakness has occurred. Now we're down near that 50-day moving average again, close to the PPO center line. I think Fossil's one to keep a close eye on. And the final one I have is McDonald's. MCD, I know, Erin, you spoke about McDonald's earlier. This is on my strong earnings chart list. I thought this made a big breakout back in June. We did see disappointment afterwards. I think a lot of the trade war, the rising dollar, there's a lot of things that have been going against McDonald's. But I think pulling back into this 154 to 156 range, which if you look back outside of the early March drop, there have been 8 or 9 occasions where we've been between 154 and 156, and we hold. Today's earlier low is 155.28. We are trying to put in a hammer. I expect that McDonald's is going to make another run for the 170 level. So I like McDonald's. I'd keep this one on a watch list, potentially even buying it down here near support. Okay, that is the end of our watch lists. So we'll pull up the summary there. Erin went through a number of stocks. I provided you about 8 or 9 as well. And here they are. And there you go. So number of stocks, maybe to keep on a watch list, maybe to buy, up to you. But some things that certainly we're thinking about and watching and wanted to mention on the show. Okay, it is time for the 10 in 10. So why don't we go ahead and get into that? You can take it away and go through the.
Let's take a peek here at what we got. All right, I did the daily RRG because we look at these in the very short term for you. And you know what I was noticing, and I'm going to zoom in right here. what we look for are those northeast directions. And I found, you guys picked a lot of them that are going in that northeast direction. And I know Julius really likes the ones that go northeast out of weakening. So I'll see what I can do as far as picking these. I do run, you might have caught a glimpse, I do have a spreadsheet. So I track, which ones we've seen in like the last week and a half. So if you saw it yesterday or the day before, you're not going to see it because we want to give everybody a chance to get theirs in. So our first symbol is AFLAC, AFL, and go ahead and vote in the chat room for the one you want to see. And the most popular will be our next symbol.
All right. Well, AFLAC, I had looked at it, and the big issue with it is up around the 46 level. Let me pull that up for everyone to see here. Okay, the 46, you can see the double top. We got up to about 46 the end of April, and then we did so again to begin June. And then really a lot of these insurance companies took a big hit in June, and AFLAC was not spared. AFL continues to trade lower. We haven't yet seen a positive divergence on this latest low. It looks like to me like the PPO went slightly lower as well. But I guess the good news is, if there is good news, that we're getting closer to a support level back in February, closer to 41. I would treat this as a trading range from, let's say, 41 and a quarter up to $46. So as we get closer to 41, I would be a buyer, but I would think that maybe we'll see a little strength, and then maybe one more low, start to get a positive divergence as we get closer to that low. And then I think the reward to risk strengthens even more so. So AFL, I probably would avoid for now, but I would keep it on a watch list and maybe see if a positive divergence develops as it nears that 41 and a quarter, 41 and a half level.
Okay. And the most popular by a mile here in the chat room is INTC. I think you know which one that is. Intel, of course.
Yeah, I've heard of it. It's challenging some gap resistance. I think it's going to go through. Part of the problem is just this is one of the groups that I would say within technology that's been hurt the most by some of the trade talk. You got a lot of these companies that have really struggled to resume their uptrends after a lot of the weakness that we saw in June, and especially with all the trade headlines and so forth. Many of these companies, including Intel, especially Applied Materials, I've noticed doing very poorly. They do a lot of business in China, so I think that's where some of this is coming, at least coming from in the short term. Let's see. Let's watch to see if we can get through the gap resistance here, which is about 52 and a half. If we can do that, then I think Intel could further strengthen. I like the fact we've gotten above the 20-day moving average, but we do still have to negotiate the gap resistance. And also notice on this rebound, the volume has been so light. So there's some positives, but also some negatives here that I would be careful of.
Okay. Let's see. This one was also quite popular, so I'm going to go ahead and put that in there. ServiceNow Incorporated, and that would be Now, N-O-W, as your symbol.
All right. Let's take a look at the relative chart. And what you have here is a stock that just broke out on increasing volume, and it's in the software space. You can see that the stock relative to software has been doing very well, especially earlier in the year, and now just sideways consolidating. So it's going along for the ride, which is great. It's clearly an outperformer relative to the S&P, and we've mentioned on many occasions how strong software has been relative to the S&P. So this is the type of stock that I would be very interested in. Now, it did gap up yesterday and break out above a double top. I think you've got some pretty good support that comes in at about 187, maybe 188. And we are currently at 189.60, so we're getting close to that. I'd also consider that rising 20-day moving average to be exceptional support now, and that's at 182. So those are two levels that I would watch.
Okay. Next up will be, let's see. Of course, we always have to look at a biotech. So let's look at Immunomedics, IMMU.
All right, IMMU. And here, well, we are consolidating in a flag. We had a beautiful uptrend, been holding gap support here to the bottom, just around 23 or a little below 23, double top at 26. So I think that is your range for now. Now we are moving up today. You might think, oh, maybe this is the breakout. I need to see more volume. This is not a good volume day for the stock to make a breakout, but it is in a space where I expect to see a breakout. I would just need to see volume confirm. Instead, what I would be doing if I was trading it, I'd actually be a seller at 26 until it can show me that it can make the breakout with some increasing volume. I think eventually that will happen, but in the meantime, continue to use 23 to 26 as the trading range.
All right. Let's see, cyclicals, apparel retailers. Let's look at Signet Jewelers, SIG.
All right, another one that I think this is on my earnings, strong earnings chart list, and that was back in June. They had a blowout report. The stock gapped up from 44 to 50, continued all the way to 58 unabated. I mean, it just continued moving higher and higher. So I think it's just sideways consolidating, which it needs. It's got great support, though, down around 55, 56. It is down about 2% today to 58 and change. I would try to have some patience, at least to the 20-day moving average. If you get that back down to price support around 55, 56, that would be even better. I like the stock. I like the space. Just need to have a little patience and try and get a little bit cheaper.
Okay. This one, we haven't looked at an ultra fund. So let's look at TQQQ, which obviously is the fund for the QQQ, but the ultra version.
Yeah, I'm not a big fan of the ultras. You're trying to manage risk, and we talked about this a little bit with ChartCon coming up, and all the speakers there, trying to talk about managing risk. We're going through the summertime. Yes, the market looks good right now. I'm bullish, but I'm still somewhat cautious. I do know it can present some challenge from time. Environment where I think it's all guns are ablaze and flying higher before I'd even consider these leveraged ETFs, because all they do is not just double your profits or your losses, but they double your emotions when you're trading, and I think that that's a problem. So it looks good. It's breaking out. That's because we've got the NASDAQ 100 breaking out, and that's what this tracks. So it looks good. If the NASDAQ were to pull back below the 20-day moving average, I definitely would want to be out of this ultra ETF. I'm not going to say anything bad about it because I am bullish the NASDAQ right now, so I think it's an okay place to be. I'm just frowning a little bit upon the idea of leveraging in this market.
All right. The next one we'll do is Kemet. Every time I see it, I think of Kermit. KEM.
All right, KEM. Let's get this one up here. Yeah, I love the action here. Look at this volume after the latest breakout. Volume came in again, so I think things look pretty good. We're overbought. That's certainly an issue in the near term. But if we pulled back, got a 20-day test similar to the one we just saw a couple weeks ago, I would jump on it. If if you're looking to trade KEM, I think you can keep a fairly tight stop at that point. The problem with getting in here, it could continue to go higher. It's hard to tell, but the problem getting in here is, where do you set your stop? If you're going to use it at the 20-day moving average, you're talking about giving up 10% before you ever hit support, and that's just way too much for my blood. So I'm going to avoid doing anything with it, but it would definitely be one on my watch list. And a pullback to test that 20-day, that would be a great entry point in my view. What's the next one?
I'm sorry about that. The next one is going to be Invesco, asset manager IVZ. IVZ.
Okay, don't like it. I'm going to pull this one up on a relative chart. First of all, it's in the asset managers group, which has not been very strong, but this one continues to move lower at a faster rate. And as a result, check out the relative strength. So you got a group that's struggling, and you've got a stock within the group that is among the worst of its peers. So this is not one that's going to interest me at all. If the group starts to strengthen and we start to see some technical positives coming out of the stock, we can reconsider. But right now, I just don't see anything that looks appealing on IVZ.
All right, let's go ahead and look at the next one, WBA, Walgreens.
Okay, WBA, big gap down on very heavy volume. Of course, this was the latest addition to the Dow, replacing GE. But the big drop there on heavy volume, I think we're filling the gap. Volume's been pretty decent on this move to the upside, so I would be careful to assume that it's going to fail at this gap resistance. I'm kind of on a fence. Downtrend is in play, but I do like the volume on this. This could have been an exhaustive gap to the downside, which marks a long-term bottom, and a move back up and clearing 69 for me would be indication that is in fact an exhaustive gap and that we're going to go higher. In the meantime, I think we're in a trading range to the downside. 59 is clearly established now as major support. You've got a low gap resistance at 66 and then price resistance 68.5, 69. So I think we're just in a trading range for now. I don't think I want to trade it in here, but a breakout above 69 would be very bullish given that what appears like could be an exhaustive gap to the downside.
All right, and our final one will be an industrial, Boise Cascade.
The BC?
BCC.
Oh, BCC. Okay.
Yes.
Okay, well, it's trying to rebound off of the selling and increasing volume we saw back in June. We did come up the reaction high. You can see just above 46. We've done that about 3 or 4 times now in the past month or so. And here we are again, 46.05, trying to get through. Volume is telling me no, that we just don't have enough volume to do it. I'm going to pull out, just go a little bit further back, and let's take a look at the weekly. Yeah, you've got a negative divergence on the weekly as well. Higher price, lower PPO. We are holding the rising 20 weeks so far. Volume trends not exactly inspiring. I'm going to pass on this one. It's not bad technically, but it could get worse if things start to break down technically. Just be aware that on that weekly chart that we have the negative divergence. And right now, because we are up against resistance, I wouldn't do anything with this one. I'm not a big fan, so I'll pass on BCC.
All right, that completes the 10 and 10. And here are the symbols that Tom annotated for you. I will have those charts up in the decision point in the Market Watchers Live chart list. And you can find that by going to the blogs tab, clicking on the Market Watchers Live blog, and the link will be right there at the top. We'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
And here we go with our final market update this morning. Afternoon. As you can see, the Dow Industrials are rising. They're actually hitting some intraday highs right now, but you'll notice that the S&P 500, the NASDAQ are all flattening out, including the the NASDAQ 100. So the NASDAQ 100, all of these are flattening out right now, but the Dow Industrials have broken out above their little consolidation zone here. So we'll be watching to see if we can get the same kind of reaction from the tech area. S&P 400 is up, but it took back over half of its gains from this morning. And we can see Russell 2000 took back pretty much all of its gains from this morning. And we're seeing it's still up at 1691.39. We can see that the TSX is pretty much unchanged, though down slightly. Treasury yields continue lower, currently reading at 2.834%. UUP mostly unchanged right now. Gold, however, big gap down and is consolidating that move somewhat sideways. We'll have to see if it can get that gap closed by the end of the day or tomorrow. USO oil is on the rise after having a difficult decline over the past couple of days. We can see the VIX has been traveling lower. Currently, we're reading at 12.36 on the VIX, which is quite a low number, telling us that people are feeling pretty bullish about the market right now. I want to take you very quickly to look at the short-term indicators for decision point. I wanted to point out the fact that you're seeing right now very, very overbought conditions. I've been writing about it this past week, has me a bit concerned. Although I want to say that when we're in a bull market configuration, we're in a rising trend like we are, a lot of times overbought conditions can be cleared simply with consolidation. And there are times where they will pull back even with a price rise in a really strong bull market. I don't think we're in a strong bull market at this point, so I don't expect to see these pull back on a rise. What I'm expecting is consolidation at a minimum and a pullback at the maximum right now, just to get these conditions cleared. But I can tell you that intermediate term indicators are still looking very promising. And that completes our final report of the day. And let's go ahead. Tom, did you have a chart you wanted to elaborate on while I get my sentiment ready?
Yes, semiconductors. I did want to just point out on the industry summary, and I looked at this over the last week, and you can see, first of all, broadline retailers are really picked back up again. This is a group that's done extremely well and has led this bull market, and it seems to be resuming with this move to the upside. Broadline retailers doing very well. And we've talked about software and internet and how they broke out yesterday. But look down here at semiconductors. Semiconductors over the last week really are not participating. And I looked at Intel earlier, and Micron struggled some, Nvidia struggled some. Some have bounced back a little bit more than others. Applied Materials has been very weak. I just wanted to highlight on this chart that the semiconductors really over the course of 2018, we had this huge move back at the end of last year. And as we kept trying to put higher highs in to begin 2018, you can see the PPO on the weekly chart just continually drifting lower and lower. And I think that's part of the issue with this group. Not only do we have fundamental issues like the trade war, maybe for many of these like Intel, maybe the dollar issue, but I think we've also got technical issues and slowing momentum that we're dealing with as well in this group. I think the closer we get on this semiconductor space down to 3,200 or 3,300, the better the reward to risk would look if we get down there. So I'm not concerned by the lack of participation by semiconductors in the short term, but I do believe that we could be getting a pretty nice setup into this group, especially as we head into the end of the year when they typically do much better. So just wanted to point that out. I know there's probably many that own semiconductors wondering why they're not participating. I think there's a number of reasons why, but I think it's way too early to give up on the group. Okay, I think it is time now to go into that sentiment. And I know every Friday everybody looks forward to this, Erin. So what do you got for this week?
Let's take a peek. I found that the sentiment report was quite interesting today. I will go over, of course, all of my sentiment charts that I follow. And just a reminder before I start showing you these charts is that what you want to look for as far as sentiment is how market participants are quote unquote feeling. We have various ways to measure that, from the VIX to polls, and also I watch the National Association of Investment Managers, see what the big guys are doing and how exposed they are to the market. So once you figure out how the market participants are feeling, then what you do is you look, it's a contrarian indicator. So when everybody's very bullish, that is bearish for the market. And so that's what we look for, and vice versa. If everybody's feeling very negatively about the market, you're going to find that that's the time you're going to start looking for a bullish move, a rally. And as I usually tell everybody, when you have all of everybody jump on the bandwagon, the wheel usually falls off. So that's when you start looking for those reversals. So that's why that's why I discuss sentiment with you every Friday. And all of these polls and all of these numbers are recorded in the afternoon after the market closes on Thursday. So that's why we like to do this on Friday. And the nice thing is it gets you ready for the next week. So let's start with the 10-day moving average of the put-call ratio. And again, this is just a reminder. In this case, high readings means that investors are bearish. because we can see it's a put call ratio. So the higher the number in the numerator, the more likely you're going to see higher numbers, of course, in the reading. And so when you have a lot of bearish activity, like I said, that becomes bullish for the market. Okay, so right now we're looking at high readings. That means that we're seeing some bearishness in the market as far as the participants are concerned. And this is actually bullish for the market. When you start seeing this topping, you can see when we've hit tops previously, a lot of times that's when we see that move to the upside. And again, this is based on the fact that people are extraordinarily bearish. And so that is bullish for the market. So this was another good example of what happened after there was some highly bearish sentiment. So that's what we look for. And right now, like I said, we're looking at very high numbers for the put call ratios, and we are getting them to turn down. So I would say, as far as this chart is concerned, we're seeing some bullish activity. What we'll want to watch is as it comes down, what the market starts doing and preparing ourselves for that upswing so that we can prepare for a downside move. But right now, this looks pretty good, I would say, as far as the put call ratio goes. This is the American Association of Individual Investors, their sentiment numbers. And this is a poll anybody can take. I think it's aaii.org. If you go there, you can say, I feel bullish, I feel bearish, or I am neutral. And they tally up these numbers and report them on Thursday afternoons. And so right now what we're seeing, these are the actual numbers over here. We're seeing quite a few more bulls right now than bears. So we're seeing a lot of bullish activity as far as the polling is concerned. And if you look last week, the last 2 weeks, in the thumbnail, it's the easiest to see, we had very highly bearish readings, and that sent our ratio very, very low. And that is bullish for the market. And it did tend to, it came in, near the lows here is where we saw that particular reading. But right now we're getting a rather high reading. I wouldn't call it especially climactic, in that you can see we've had quite a few readings above that previously, but it is elevated. And that tells me that there are more bulls out there. So when I look at this chart, I would say that this is somewhat bearish for the market because people are bullish, but not to the extreme. All right, let's look at the National Association of Active Investment Managers. This is their exposure to the market. And, we've had some very, very high readings. They have been very exposed to the market. And, so what we're watching right now is a lot of bullishness as far as, the big money makers are concerned. And today's reading, yesterday's weekly reading, is elevated, I would say. It's not climactic, but you can see that there aren't that many readings that we get above the level we're at now, which is just below 90 at 88.5. So this tells me that the active money managers are still quite exposed to the market. That means they're feeling bullish. And of course, that can be bearish for the market. So I think that with the active investment managers, sometimes you'll get a little bit of a delay before you get that reading that you want to see as far as the reversal. So, we've had in this fact where we had the highest historical reading, that means that we were looking at very, very, very bullish activity and exposure as far as the active money managers went. And, we ended up not getting a big reversal off of that. We had a little bit of consolidation over, it looks like 2 weeks after that, but then we had a nice move upward. And so a lot of times these guys know what they're doing. And so I read these a little bit with a grain of salt, in that, if the big money managers are highly bullish, sometimes that means they're on the right side of things, because they tend to be on the right side of things. So right now we're looking at elevated readings. So I still would say that tells me that they are bullish, and that I would say is bearish for the market, somewhat bearish. Let's go ahead and look at the RIDEX asset analysis. The RIDEX ratio is something that Decision Point came up with using a basket of funds. They used to be under the purview of Ridex, but now that was taken over by Guggenheim. And so we still keep the Ridex name because we call it the Ridex ratio, and these funds still exist. They're just under a different name right now. So what we like to look at is the assets, because those are reported to us every evening. They tell us how many, many assets are in all of those bear funds right here, how many assets are sitting in money market funds, and how many assets are sitting in the bull and sector funds. So just by watching the money flow here, it gives you a really good idea as to sentiment. And what I like about the Ridex ratio and this chart is the fact that it isn't just a poll. It isn't just saying finger in the wind, yes, I am bullish, yes, I am bearish. Meanwhile, you're really bullish, right? You've set that in your poll, and then you go and sell half your portfolio. So, it's really, those kind of readings aren't quite as, I don't trust them quite as much as I do the actual money flows. So this is why I just adore this chart. And what this is telling me is that we're seeing a lot of bullishness out there. Notice the big drop in the assets in the bear funds, quite a drop. And now we're also seeing during the past week, we've seen, you can watch right here, we're seeing a decline in the money market funds. So money is coming out of bear funds, money is coming out of cash. And where is it going? It's going into these bull and sector funds. And we're getting close to that overbought territory even for the asset level that we follow here on the, the Decision Point Ridex bull sector. So we're seeing some very high readings. You can see that we're getting a reading higher than we've seen since back in April. Actually March. So we're seeing a lot of bullishness here as far as the money flows. And, I like to see this move up here, the rising bottoms, the confirmation here on the Ridex ratio. We haven't had that breakdown yet, and I will be watching for that. That would be another indicator that we should expect a decline. And, so at this point, though, watching just the asset flow here, I would have to say that, these are highly bullish participants, and that is very bearish for the market. So I would look at these charts as telling me that we have some problems here in the near term. And, when you looked at that short-term indicator chart, it makes sense. All right, I'm going to go show you my ultra short-term indicators, as I call them. And I call them this because they are climactic. I only, when I look at this chart, I don't look at this as telling me a forward information of more than a week. I actually use this, and I start looking at the next day or two when I get these climactic readings. And I'm showing you this chart because breadth gives you an idea of the market participants and how they're feeling about the market. But the VIX is also, we always talk about this as being a temperature of how investors are feeling about the market. So I watch this, but you'll notice that I use an inverted scale for my VIX, and it drives everybody crazy that I do that. But here's why: because on a short-term basis with the VIX, when you get everybody very bullish and you start getting to the top of this Bollinger Band on the inverse scale, that's overbought situation as far as sentiment. People are very bullish. And so when I see those penetrations of the upper Bollinger Band, I start looking for a short-term decline of maybe a day or two. And it's fairly accurate, I would say. I mean, I could show you all of these. This one, it didn't close above that upper Bollinger Band. Didn't work out quite as you would have expected in that case, but you could see it was a very, it was a long bar that day. We were at the average, and then we were way above the Bollinger Band on the upper side. So that was an interesting move there. But notice right here and here where we had those moves below the bottom Bollinger Band, that was your signal in the short term to expect higher prices. And it's pretty accurate. I mean, in the shorter term. But we talk about it, I know, Tom, you talk about it often, but in more of the short to intermediate term. Because if you do look at it on the short and intermediate term, you don't want the inverse scale, because it does tend to, you want those those low readings, that comfort readings of investors over a longer period of time, because that can give you the information that they're willing to get involved and willing to put their money into the market. So right now, what I'm looking at is we're near a penetration of the upper Bollinger Band. This was, to me, a false selling initiation. I saw these after this decline, and my first thought was this is a selling initiation, not an exhaustion. How could it be a selling exhaustion? It was one day of decline. So I was looking for lower prices coming off of that. Didn't happen. Sometimes it doesn't happen as expected. And now we're seeing readings coming in on the positive side yesterday. Not really that climactic in the grand scheme of things, but certainly on the upside after we got that, what I thought was going to be a selling initiation. But we're getting toward the top of the VIX band. We're starting to get very bullish readings here with breadth. So I am going to start looking very soon in the next week. I'm expecting some decline. And so let me move to the next chart, and that is our Wall Street sentiment survey. And I'll discuss this one a bit before we start really getting into it. And this is the one that is the poll. It is a poll, but it is a poll of mostly a static pool of market timers, where we give our what our sense is for the market for the next week. So this is a very, very short-term survey. We're not, in a general sense like AAII does, how you feel about the market. They're not market timers. It's mainly the feeling, and that could be over a week, that could be over a month, that could be 2 months. This particular survey, and it is provided by wallstreetsentiment.com, Mark Young, who has come on the program a couple times. And, this is they ask us, what do you think the market's going to do next week? And so that's the poll we ask you guys to go take. And if you go to the polls right now, you can see how will the S&P 500 close next week, higher, lower, or mostly unchanged. And so this was the last week's numbers. As you can see, very bullish. All of us, Tom, myself, and you, the viewers, came in expecting a higher move this coming week. It turned out, I would say, of course, over the week it has moved higher. We did have that hiccup there, like I said, where I thought we were looking at a selling initiation, but right now, highly bullish readings, and that was last week. So now we're going to see what we come into with next week. And, with these, what Carl and I say a lot of times, it's kind of like the active money managers, the name chart that we look at. And that is that market timers in the very short term can be fairly accurate. And so I don't necessarily look at these as giving me the opposite opinion, because generally you're going to get a little bit of move in the direction that the market timers were thinking was going to happen. But, it is sentiment. It is contrarian. You can see right here, this very highly bearish reading came in, and it came in on a bottom. So, it's just something to keep in mind as you read these charts. But I wanted to show you, because our bull bear ratio was so very high on both of the last 2 weeks that we've been looking at. And that is telling you that there are a lot of bulls out there. It's very bullish. So what we want to look for then would be, of course, a decline. And we haven't seen that off of those readings. And again, I look at it as the fact that you've got, again, market timers, and, we tend to be pretty good at what we do. not 100%, of course. So something to consider when you look at these charts. And so with that, I do want to pull up the survey and just see how you all are feeling right now. And here's what we did cover as far as the sentiment update. And I'll have this chart in the Market Watchers Live blog. But overall, I would have to say that, the theme for me is that we've got, bearish. It's a bearish theme. Investors are mostly bullish right now in their outlook. And to me, that is bearish for the market. But I'm not seeing like extreme bullishness yet. I'm not seeing that. So I'm not going to, for me, as far as the survey is concerned, and you can tell me your thoughts, Tom, but I'm going to go into next week with mostly unchanged. I've got those short-term indicators. They're overbought. They need to pull back. I think we're in still a pretty good bull market situation. So I'm not looking for a correction or anything like that next week. But I think we have to work out some of this rally. And we only had that one down day this last week. So I am looking for next week to be a little rocky, but not rocky enough that I'm going to call the market closing lower next week. So I'm going in mostly unchanged. What are you thinking?
I've got mixed thoughts going into next week because the S&P does start one of its most bearish historical weeks of the year on the 17th at the close, which is Tuesday. So that leaves the latter part of next week subject to possible historical headwinds. I really like the market, though, technically, and I'm going to stick with the technical side of things. So I'm going higher.
Okay. All right. Like I said, for me, the technicals are different. So that's why I'm going in mostly unchanged. So, we each have our different ways of looking at it. And what is seasonality?
Well, seasonality is pretty bullish going into the early part of the week. We're in a very bullish historical period right now. I posted that in my blog this morning on the NASDAQ. I think the week that we're in currently has an annualized return of over 61% since 1971. But the week starting July 18th through the 24th, the NASDAQ turns negative at a 41% clip since 1971. So, and again, I use these as kind of secondary indicators. I think it's much more important what's going on in the charts. We talked, for a long, long time about the S&P 500, trying to get through 2,800, 2,775 to 2,800 being very, very big resistance. And so far, we're clearing it. We do still have a few hours left in the day, 2.5 hours. But I just looked at the S&P and it's at 2,803. If we can hold that and get in and get a positive close, I would expect that we're going to start off next week strong. It's just a matter of whether or not we can finish it strong.
There you are. All right. So I will mark you down for higher, and we will mark the audience down after the close. I'll come in and look, but it looks like the audience is also at higher for next week. And then, as I said, I'm in the mostly unchanged category. So I need to keep track and see how close we come on these. But I know last week everybody went in higher, and we definitely were all on the right side of that call.
I think a couple of areas that are going to be somewhat important are going to be transportation and the banks, both of which have been consolidating and struggling in 2018, but have still bullish uptrends in play on their long-term charts. So we'll see.
All right. And there's our upcoming schedule for next week. And my workshop will be on more trading chart patterns. So I did that 2 weeks ago, and I did not get to cover all of the various patterns. So I'm just going to go ahead and continue that on. And that's it. Happy Friday.
Absolutely. Happy Friday the 13th. Also want to make sure everybody remembers ChartCon coming up. Don't forget about it. Go get your registration in. I want to thank everybody for stopping by and being with us today. Please complete that survey as you exit. We do love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. We'll see you back here on Monday. Happy trading.